So in my history, I mentioned up to 2020. So effective 1st January 2021, of course, the processes that we are doing during the research and fact-finding about the digital economy led us into a few decisions. So initially, we dealt with a tax called digital service tax, and it's something that we are mostly known of because that is how we came into existence. And this was enacted through the Finance Act of 2020, which imposed a 1.5% tax on the income of the non-resident taxpayers. So for the non-resident taxpayers, we are talking about the Googles, the Metas, the Amazons, Netflix. So on the income that they earn from Kenya, we imposed 1.5%. It took effect in January of 2021. And of course, like I mentioned, it targets the companies conducting business over the internet or through a digital marketplace. So thereafter, because of, remember, these taxes are global taxes because now we have to tax people in Netherlands, China, Rwanda, everywhere, all around the world. So there was a bit of a problem, a bit of a challenge in taxing on the rate or the way we are taxing it, because they are now the resident taxpayers, that is you and me, were saying, how comes us, we are being taxed at 30%, and there's someone else who is being taxed only at 1.5%. So in 2024, we had to amend the laws, and through the Tax Laws Amendment Act of 2024, which took effect on 27th December of 2024, the government proposed an effective rate of 3% tax payable. And how that was done is that we deem the profit that is being made by those non-residents, that they're making a 10% profit out of the sales here in Kenya. And therefore, the 10% profit is what we taxed at 30%, just like what the resident taxpayers are doing here locally in Kenya. So the tax rate is 30%, but a deemed profit of 10%. I know for those of you who are a bit aware of what how the taxes are being calculated, is that we tax the profit. We do not tax the entire amount. So when maybe someone pays you 10,000 and used maybe 5,000 as an expense to earn that money, so we net off the expenses. So the 5,000 that remains is what is taxed. So that is how we moved into the significant economic presence tax. So as I mentioned, it took effect on 27th of December 2024. And the calculations is as I've already explained. So for this significant economic presence tax, I know there's someone who mentioned they want to know how these taxes are affecting them. This is one of those taxes that you might not exactly feel how it's affecting you, because now it is placed on the income of the platform holder, let's say. For example, let's give an example of Google. So Google might place this amount within your invoice, but you might not. It's not exclusively mentioned that 3% has been charged on you. They know how to absorb the taxes within their pricing. So among the exemptions that are there, an non-resident person who operates through a permanent establishment, I can give you an example. Let's say, let's use an example of eBay. with a digital marketplace, for example. And then there's a local one here called Kama.com, who operates a digital marketplace. So you just place your goods on Kama.com and people get into the Kama.com as a platform and purchase. But now Kama.com is located in Kenya and has a permanent establishment in Kenya. So it will not apply for Kama.com. Kama.com will pay the normal taxes in Kenya that are chargeable in the resident rate. But now for eBay, since it is a non-resident without a permanent establishment, it will apply on them. So exemption number 2, most of these are laws under the Income Tax Act. So any income charged under Section 9(2) or under Section 10, I would want us to maybe try and research on what these 2 sections say. But maybe it's going to be explained in further slides. Again, for those of you who are interested in maybe knowing a bit of any of the Kenyan laws, they are posted usually on a website called Kenya Law. So if you go to Kenya Law, you'll get a lot of all our laws that have been enacted in Kenya but by our parliament. And to your surprise, there's a witchcraft law. So maybe it's interesting for you. You can go and check what the witchcraft law says. Exemption number 3, any non-resident person providing digital services to an airline in which the government of Kenya has at least 45% shareholding. Of course, this one is because, our airline business has been struggling quite a bit. So we are trying to boost them with whatever exemptions we can be able to place on them. So at least in that front, that is not chargeable to them. So like I mentioned, the SEP tax maybe might not be exclusively seen in your invoices while these companies are invoicing you. But it's good for you to know so that maybe if you notice there's a slight change in price, then that might be a reason. But again, we've put a very modest rate so that the prices do not go beyond what maybe our content creators, the users of these platforms, can be able to cover. Because again, it would be very unnecessary if we have done a lot of work to try and boost the digital space with even increasing the speeds and updating ourselves. When it's 5G, we are there. Then we suppress the ones who we are targeting to use the service. So maybe I'll pause there for a second before I move on to the next tax head, so that maybe you can have a few reactions or questions with regards to this significant economic presence tax.
Thank you so much, Brian. And thank you even for those who have already begun to ask questions on the Q&A. You can also use the Q&A section to ask your questions. I'm seeing a question from Emmanuel. Emmanuel is asking about the application of VAT generally, to give a breakdown on how it works and why it's important for a business to pay VAT, and at which point does one pay. So that can be addressed by Brian, though Ivy has responded in the chat section. So in case anyone else has any other question, Please feel free to engage us via the Q&A section or the chat. Then we can be able to respond. Brian, I think we can proceed for now. Then maybe as the questions come in, we can address them probably at the end of the session.
Okay, that is in order. As I was even not expecting very many questions on this topic. Maybe on the next one. So I just wish that we need to broadly understand the tax laws that are attached with the digital economy sector. We might not understand everything, absolutely, but pick up a few things to start the conversation so that now we can come up with questions that are tailor-made for your particular area that you're handling. What is important is maybe we understand how the taxes affect all the players in the digital economy. I will also explain how it affects the platform owners, but also the consumer of the services. So especially from the next slide, we'll see a bit of this, how it's affecting both players. And maybe number 3 is maybe to get to know your role as the consumer of the service and how to comply with the laws. I know I saw one question on the chat that someone wanted to know how to comply with the tax laws, which is a very positive comment. I like that comment. It's a very important bit of our job to make sure that everyone has the know-how of how to comply with these laws. And I know after this engagement, I will have quite a number of ambassadors to take out the information out there. Maybe one request that I will have, or we will have as an office, is that hopefully at the end of this engagement, maybe if you can have some 5 platforms that you guys know there that might not have come to our attention, then it would be very important for us to get to know them so that we can recruit them for tax-based expansion. So I'll go to the next topic, VAT on electronic, internet, and digital marketplace supply. We have, this is a sort of a tailor-made VAT, probably not the normal VAT that you and I pay when we are buying sugar at the supermarket or at the shop. It's a VAT that is specifically made for this sector. And we term it as the simplified regime. Of course, a lot of things that are required for the residents have been set aside for this case, so that we make it as simple as possible for the non-residents out there to comply. As I mentioned, we have taxpayers from all continents. Maybe we are only missing the Antarctic and Arctic, if there are continents in your view. But all the other continents, we have at least more than, say, 10 taxpayers from each continent. So VAT, we'll term it as VAT EIDMS. These are supplies made over the internet, electronic network, or any digital marketplace. So someone will want to ask, what is the difference between the internet and the electronic network? The definition was pulled out of the global best practices, because you might mention there's usually there are a lot of contests that are there once once a taxpayer notices that there's a loophole. And I can maybe mention that paying of taxes is not an easy thing to do. And I'm sure even, okay, I'm not sure, but I know if some of us even here at KRA, if you've paid your entire money and asked to pay taxes, there's still going to be some push and pull. So even though we know the benefits of paying taxes, someone would want to try and avoid it here or there. So we tried to expand the definition of what is covered under this sector, so that nothing is left unturned, no stone is left unturned. So the rate is at 16%. Of course, we have to match it with the resident rate here, so that there's equality. So we had to define what a digital marketplace is. And it is defined as a platform that enables users to sell or provide services to other users. So anywhere you get into, any platform that you get into, you get maybe someone you'd like to get a plumber and you don't have any direct contact, then you go to a platform, engage with a plumber there, and a service is provided to you in that form. So that is an example of a digital marketplace. Not only if you're going to purchase a good, or maybe you want to purchase some Air Jordans from Australia, maybe. That is also a digital marketplace. So it can be you can be selling a service, or it can be providing a service, or you're selling an item. So it can go both ways. So VAT applies to both, we call it B2B and B2C. So B2B means business to business transaction. So say maybe you have a shop here in Kenya and you're purchasing something from US. So you purchase it, then you come and sell it to others. So that is a business to business transaction. Or you can be buying it for yourself. That is a business to consumer transaction. So the services are supplied over the internet, electronic network, or any digital marketplace. You might be asking yourself, maybe, how is it over the internet or the electronic network? Maybe I can give an example. Most of us here are using iPhones these days. They're better, maybe people say they're better gadget for content creation. So when you're using your Apple device, any Apple device, you have to purchase cloud space, or maybe Apple Music or something like that. So for you to access that service, you have to be on an electronic network, and it has to be through the internet. So I know there are services that are offered offline, but now it's still covered when you talk of electronic network. So that is how that works. So if it meets those parameters, then VAT shall be charged on those services, and that particular company, that non-resident company, will be required to register for VAT here in Kenya. So yes, it's applicable to offshore suppliers of digital services without a permanent establishment. So the ones we described earlier, that is those are the taxpayers that we handle under this regime. The non-resident taxpayers have an option to appoint a tax representative. That is an option that any of us have, even the resident taxpayers. If you feel like you don't want to be disturbed with a lot of the tax matters, you can appoint a tax representative. There are quite a number of tax representatives, the KPMGs, PwC, Deloitte, those kind of taxpayers, the PKFs. Those are tax representatives. Of course, for the non-resident taxpayers, it becomes easy for them because they don't have to fully understand the taxing system in Kenya. The tax representatives in Kenya will handle all of that on their behalf. So the B2B and B2C supplier on the digital marketplace from the export country shall not be required to issue an eTIMS receipt. This is they've been exempted from issuing an eTIMS receipt. So maybe I know a lot of us now know that you cannot be able to claim any expenses if they are not on eTIMS. So for this particular taxpayers, we've made it a bit easy for them. So long as the invoice that they have provided to you has the normal invoice features, it has to have the date, invoice date, the invoice number, name of the recipient of the service, that is you and me here in Kenya, the PIN number, the invoice, the amount, and the tax due for that, tax payable for that amount. That is charged at 16%. So if you received an invoice like that from an unresident supplier of a service, then that will suffice as an invoice, a valid invoice in the view of KRA. So for the B2B transactions, the non-resident suppliers are required to submit a return. They usually do a return just like the resident taxpayers. And when they are doing a return, in order for you here to be able to claim the input, or you can claim it as an expense, so to speak, you need to provide your PIN to this non-resident, so that when they are filing the return, they exclusively indicate your PIN and your name as a recipient of that service. So that is the only way you'll be able to claim it as an expense here in Kenya. If that is not done, then it will not be possible for you to claim it as an expense, because it will not be directly attributed to you or to your PIN. So I know most of you have received that email from Meta, Google, and the likes to ask you to provide your PIN. Please feel free to do that for your own benefit. So yes, that last point explains just what I just mentioned. Sorry. So that is it for the VAT bit. So the three things I mentioned that we need to pick out from this trainings is that what I just did is broadly and make you understand how the taxes work. So how I've also mentioned how it affects the players in the digital space. So there's a platform owner who now is required by law here in Kenya to register for a PIN and charge the taxes and account for the taxes here in Kenya, even though they are not here in Kenya. So for the consumer of the service, your invoice beginning maybe 2021, you noticed that there was a 16% VAT charge that was placed on it. So do not see it as fraudulent, but also if you feel that it might be fraudulent, you can also reach out to us so that we can confirm to you whether is one of our taxpayers or not. And if he's not one of our taxpayers, we recruit him or her very fast. So And then, so yeah, your role as a consumer of the service is to comply with the tax laws and bring to our attention any case that you feel you're not satisfied with, so that we can clarify both to you and to the provider of the service. Over to you, Ruth. Maybe you can coordinate any Q&A for this section.
Thank you so much, Brian. Okay. So we'll take a few questions from the chat section. There is a question from TSML who says VAT on EIDMS is on the product value only, or you charge 16% on the product and another 16% for use of the platform, making the products to be expensive and unattractive for purchase. I think that's a comment. Lionel says, some of them ask for the PIN, but some do not currently provide that opportunity. Does that mean we should avoid such providers, or is there another recourse? Brian, is there a recourse?
I think some of the questions have been responded to by Ivy. Maybe which particular one was that? Sorry, I didn't quite get it.
Okay, yes. Ivy says to Lionel to provide the PIN to the non-residents, and to TSML, the issue of eTeams invoices on imported services is currently being handled. I'm not seeing any other questions, Brian. Let me just check if there's something I have missed. So this is your opportunity to be able to ask questions. So please feel free to ask. Don't be shy. Ask and engage us on the section. I'm seeing there's someone's hand raised. Just a minute. Maybe we can give that person an opportunity to speak so that they can just ask. Just a minute. So Brian, I'll allow you to speak. Then you can ask your question to Brian. Brian and Brian. Okay, just a minute. Brian, I've unmuted you. You can ask your question. Brian To, you're there? Brian? Or that hand was up by mistake? Anyone else who would like to be unmuted to ask a question? Feel free, now is your chance before we proceed. Okay.
Maybe I can pick the one that Kevin, or is it Kevo? I don't know if it's Kevin.
Kevo, let me just allow him to speak just a minute.
Okay.
Okay, Kevo?
Okay, yeah.
Kevo? You can unmute.
Yes, can you hear me?
Yes, we can. Go ahead.
So my question was, I just wanted to understand the issue of input tax. What exactly is input tax and how is it claimed if you have to claim it? Yes.
Okay, thank you for that question.
Thank you very much, Kevo, for that question. So input tax refers to the VAT expense that you have incurred in your business. Let's say you're in content creation or maybe anything to do with the digital economy. Of course, you will need internet for you to do your duties there. So if, for example, maybe use a service provider like Zoku or Jamii Telecom or which other? Safaricom. So when you're paying for that service, remember your invoice will always have a 16% VAT. And the only reason you are incurring the 16% VAT is for you to be able to conduct your business. So input tax is the VAT expense that you have incurred in order to maybe generate income or be in business. So maybe if you had to go for a photo shoot somewhere and you've used a taxi, that VAT that you've used on that maybe Uber or Bolt or Wasili, then that VAT bit that is there is what we term it as input tax. So while maybe, for example, Google will charge you VAT while it's paying you for your service, for the videos that you placed on YouTube, or maybe sorry, when you'll be required to charge VAT to maybe say if you're creating content for maybe Safaricom, when you're invoicing them and you have the VAT obligation, you charge them VAT. So, but while you are charging them VAT on that invoice that you've given them, while making that maybe the content that you're creating for them, you incurred some expenses. So maybe you incurred the expenses, maybe the traveling expenses. You maybe used a cab or used your own car, but it used petrol. So all the VAT that you've incurred while making that expense and while making that income is what is termed as input tax. So the only way for you to claim input tax is if you have a VAT obligation. So otherwise, if you do not have a VAT obligation, then all you remember the B2B and B2C, all your services are termed to be B2C. So it's like you are the consumer of that service that you have used. You are the final consumer rather. So unless you are registered for VAT, you might not be able to claim input tax. However, you will still need that invoice for you to claim it for the income tax expense. Remember, this is the period, the filing period is now. So those expenses that you used to incur, you incurred those expenses to create your income. You will still use them for to claim them as an expense in your return while you're filing your return. So I know most of us might not have a VAT obligation, but if you do have a VAT obligation, you claim both input tax on the VAT and you claim it as an expense on your end of year return, which I hope all of us have already done by now. Tusikuwe watu wa last minute. I hope I'm clear, Kevo.
Kevin, is that okay? Your question has been answered?
Yes. Yes, the
Okay.
question has been answered very well.
Thank you. So we have another question from one of our taxpayers who says, please clarify, if I am looking into establishing an e-commerce section on website, how will this impact me as a resident supplier, and how do I ensure compliance? Or is it non-resident selling locally only? Brian?
Thank you for that question. So as it is right now, if you're selling, of course, when you're coming up with a website to sell maybe items on an e-commerce platform, so to speak, you might be starting small, yes. So at the moment, you're only selling it to locals here in Kenya. But remember, as you grow, someone will reach out from Uganda, Tanzania, South Africa. Maybe someone wants to buy something from, I know a lot of people who buy things from Australia and the US who want some items that are locally made. So you will get to that point. This type of taxes have a global reach, as I mentioned. So currently, maybe here in Kenya, we were one of the pioneers in Africa for these taxes. We have already had maybe close to 15 countries come to benchmark with us. So as you see, as you know, we are it's a tax that is growing very fast, and people are embracing it. So currently here, the regime, the one that I'm explaining here currently, is only affecting the non-residents. So to you, someone in Uganda who are doing this, or Tanzania, here our neighbors who are doing they already adopted this regime, then to them you will be a non-resident. So, and our taxes are usually similar, if not the same, because again, some of this, like I mentioned, some of these countries benchmarked with us, and the laws are pretty much one for one for what we are doing here. So it's good for you to understand it, maybe from a local or a resident perspective. But again, when someone in Tanzania reaches out to you to register, you already know what is required of you. So just to answer that question, for Kenya, this is only for the non-residents and not the resident. So if you come up with a platform, we will not require you to charge VAT through this regime or the significant economic presence tax. It's not for the resident. But now, when it comes to Tanzania Revenue Authority, they will require you to register with them there in Tanzania, or the IRS. I hope that is clear.
Thank you, Brian. I'm not seeing any other questions just as yet in the chat section, so maybe you can proceed.
Also, when you type in your question, I can see my colleague Ivy is very quick to respond. You can just check on her response.
Okay. We can proceed?
So we can proceed to the next one.
Yes. Thank you.
So the next bit is what I think largely affects most of us here, which is, amongst other things, taxation of digital content monetization. So with the growth that we've seen so far in the digital space, remember it started in 2019. Then there was a very big force that was there in 2020 during the COVID era. We were all locked inside the houses, and the only things we could access were our TVs and our telephones, mobile phones, and there was an exponential growth in how we consumed the digital content. So both maybe the growth in Netflix, YouTube, Patreon, those podcast platforms, Spotify and the likes, there was no way you could go to a concert or go to the movie theater during the COVID period. So we were all focused on our screens, whether the big screen on the wall or our small screens in our hands. So this, of course, we all the other tax heads, we had to do a bit of research and try to understand what happens in this sector of content creation and the likes. So even after the COVID era, I'm sure all of us, we all know one or two companies that never opened their physical offices or shops thereafter. But you might think they went out of business. However, they moved in the digital space and they're even making better profits, better income through the digital space. So after understanding quite a bit of what is happening, and of course with the major boosts that we had, the country provided us with the internet connection and a lot of blocks that were made on the maybe you remember we used to have analog TVs. Now we locked the analog TVs, and now we are doing only the digital TVs and the smart TVs right now. So a lot of those changes that were made by the government ensured that most people moved to the digital platforms or tools in order to perform their duties. We'll be sitting here with someone here in Kenya, but they are working in the US. You're wondering, why is this person all of a sudden speaking some American English, yet we are speaking Dholuo a few minutes ago. So that is how transformative this era was. And so after a lot of research, again, we as an authority, we do not come to our taxpayers with things that are half-baked. We have to make sure that we've done a bit or a lot of research so that it fits in with the general public. So the Finance Act of 2023 included digital content monetization. At the time, it had a few teething problems that we found a few challenges that had to be cleaned up. So we did not enforce this law during that period until after the Tax Laws Amendment Act of 2024, which again took effect in December of 2027. So, December 27th of 2024, which now reinforced a few compliance obligations that were placed on the digital platforms. So for this particular one, this particular bit, which is now anchored under Section 10 of the Income Tax Act, again, find some time to try and go through some of these laws. Of course, they might confuse you here and there, but again, like I mentioned, it sets a good base for discussion, which us in this office, love a lot of discussion with our taxpayers. So on the bit of the taxes, so we want to check on which bit of this digital economy sector was affected by this amendment. So it introduced withholding tax upon payment from a platform. So if you're receiving a payment from YouTube, let's say, for example, or you're receiving a payment from Airbnb, you'd expect that a withholding tax will be charged on the income that you are going to earn. So payments can be in form of rentals, gigs, maybe content monetization, remote work, research, or education. So for those of us who are doing some work, maybe in some of these remote work platforms, again, we need these platforms because not all of us can fit into an office that is present here in Kenya currently. So we have now you have an option of going to working in Australia while seated in your home in Kamulu. So while payments are being made to you, we're expecting that a 5% deduction will be made from your income and accounted for by the platforms. So again, this one affects both platforms that are local and the ones that the non-resident without a permanent establishment. For example, if you're selling items on Jumia, and Jumia receives payment on your behalf, then disburses to you, then that will come less than 5%, which will appear as a credit on your return. So sort of it will reduce your tax obligation by 5% while you're doing your end of year return. So provided the platform owner or operator facilitates or makes payment for the facilitation through the digital marketplace, then that 5% will apply. You might find maybe an unresident person, say someone has come to shoot a documentary on wildebeest migration, and then post that content as a non-resident, then the rate that you're expecting this non-resident to account for is 20%. So for the residents is 5%, but for the non-residents is 20%, and it's a final charge. We do not expect them to make any further declarations on this withholding tax. So as mentioned, again, implementing this for a non-resident can be challenging because someone comes and does the documentary on the wildebeest migration, then leaves to go back to China to edit it and posts it while in China. So a bit of a challenge, but again, our research team is looking into how best to fit into this to deal with the challenge. So the two laws that are there are those mentioned there, Section 10(4) of the Income Tax Act. It says word for word for what I've just explained, that the residents and non-resident persons being the owner or operator of a digital marketplace or a platform makes or facilitates payments in respect to digital content, monetization, that is one, property or service, the amount thereof shall be deemed to be the income which has been accrued or was derived from Kenya. So that is why I was trying to give an example of each. So for the content monetization, you can give an example of TikTok. So the amount that you have earned from TikTok can be the bit of content monetization. For a property or a service, for property can be the Airbnbs or the booking.coms. So before the payment is made to you, a 5% charges is deducted from your pay. For a service, maybe you can look for an example like maybe for those of us who are doing some research projects for these non-residents. So for that service, before your pay is sent to you, a 5% charge shall be deducted from your earnings. Section 5 is just defining what this platform is. It means a digital platform or website that facilitates the exchange of a short-term engagement, freelance, or provision of a service between a service provider who is an independent contractor or freelancer and a client or customer. So the client or customer might be outside the country, but the freelancer can be both inside the country or outside the country. But now the freelancer or the contractor is solely in Kenya, independently in Kenya. So there are other short notes that are there, what maybe might be offered. So digital content monetization means offering payment and offering for payment, entertainment, social, literal, artistic, educational, or other material electronically through any medium or channel in any of the following forms. So it can be an advertisement on our website. It can be social media platform or similar networks. Maybe partnering with a brand or an endorsement or sell of such brands. So you find maybe in someone's podcast, they have maybe merchandise that has been placed on top of the table, or maybe somewhere, or in between the advertisement, in between maybe a podcast, they mention something about that product. So those are some of the things that are being looked at here. So it can be a sponsorship where a brand owner pays a content creator or content for content creation and promotion. I know most of you are doing these things. So you can be, maybe it can be a skit that I know Kerry had one the other time. I hope most of you put in your work towards working with Kerry. So you do a skit showing how to pay some taxes or why it is important to pay tax. Then you are paid for that work. So there will be a 5% deduction on your final pay. So affiliate marketing, I know these terms are very familiar to you. Subscription services where the audience pays for periodic fee. So for those of us who are following iShowSpeed and professing our love for him, and you have subscribed for the service, there's a bit where maybe you go and make a payment so that you get some exclusive, maybe for you to comment. There are times maybe they can just close the comment section and only the people who subscribed can comment, something like that. So yes, you can also offering for use of a logo, like what I mentioned, or a catchphrase. Maybe during your content, you mention a certain catchphrase in between your skit. Maybe you mention tulipe ushuru tujitegemee. That is while you're making content for KRA. So such things are also within scope. Maybe membership programs, like I mentioned, you go and be a member of a certain program and you pay membership fee. Then that is part of what we are looking at also. Licensing the content, including photographs, music, or other businesses or individuals for use in the user's own projects. So if you're the one who came up with maybe a dance style like Anguka Nayo, and you've licensed it, and someone wants to use it, these are some of these things that this withholding tax on content, especially on content monetization, looks at. If a content creator earns any commission or fees from crowdfunding, then this is also part of what we consider as content monetization. So this mostly, I've explained most of this. So income earned from a digital content creation, including those platforms. The affiliate marketing applies to the content creator who is a Kenyan resident, and the income arises from digital content monetization. So it doesn't matter if it has come from, say, a non-resident taxpayer, for example, Google. Then Google will account for it. If it is coming in from, maybe, I don't know if Andrew Kibes Afrique is registered here in Kenya, so they will also be deducting the 5% and accounting it on your behalf to KRA. So again, most of this I've explained. So the withholding is at 5% for the Kenyan, for the resident taxpayers, and 20% for the non-resident taxpayers. The tax is usually remitted to KRA by the 5th day from the withholding date. So what does that mean? If today you are being paid today by YouTube. So 5 days from today, they'll need to account for those taxes, file and pay. So I hope that is clear for those of us who are maybe developers and would want to have a platform one day. So once you withhold, you have 5 days to remit the amount withheld. So of course, KRA, I want to remove the word may, but KRA shall require platforms to register and file returns electronically. Content creators should register for a tax PIN and declare the income while claiming credits for the tax withheld. So if you do not have a PIN, then you're being charged taxes, but you cannot expense them in either through VAT or income tax. So ensure all of us here have a PIN so that you can be patriotic Kenyans. Platforms must maintain records for payment and remittances. So we just don't want you to make payments and throw away your records. Every once in a while, we usually do audits and compliance checks. So we'd want whatever is being declared to tally whatever you have in your records. And in case of any discrepancies, we will require you to pay any of the amounts that have been defaulted. So we mostly use digital data and third-party information for enforcement. We have a lot of ways to enforce, including we can even talk to the parent country where the non-resident is domiciled and ask them to enforce the payment of those taxes. Of course, they don't want that to happen, so mostly they comply, because if it is noticed that wananyanyasa others, they are not paying taxes elsewhere, then their country also will put a lot of pressure on them, and no one wants to be audited by external auditors. It's usually a very painful thing, so they prefer to comply. So of course, like every other non-compliance in tax matters, it will attract penalties and interests, which are anchored under the Tax Procedures Act of 2015. So with that, I think that marks the end of my presentation. Maybe over to you, Ruth.
Thank you so much, Brian, for that enlightening presentation on taxation of the digital economy. I'll take a question from Nganga, which hasn't been addressed yet. Nganga says, Meta recently announced the deduction. Have Google and TikTok been deducting, or they are yet to comply? Also, what happens to income that has been earned via Meta before they started enforcing the deduction since the law came to effect? Brian, should I repeat the question?
Yes, it's clear. I got it.
Okay, all right.
So normally, if the law has been set, like the law was set as from 27th of December 2024, we are expecting that some of this, or rather all of these platforms to comply. However, being that the size of such platforms like Meta and YouTube, at times they need a bit of time, which they request from us. They request a bit of time to align their systems so that some of these guys don't do anything manually, because you find their data center maybe is in Germany, someone else is working in Australia, the other one is working in the US. So they just need to streamline their systems so that they now start complying effectively. If someone just decides to neglect their duty to charge these taxes intentionally without informing us, then the tax is usually placed on them. So if they did not inform us that they are setting up or whatever they're doing, then they will start from a certain date, and they fail to make any payments, then they will be personally liable for any taxes that are unpaid. So for those, if Meta has already informed, has reached out to its content creators, then that is in order. For the rest, they might be maybe looking into their system so that they comply. And yes, all of them are going to be compliant. So just prepare yourselves. Again, it's just a small portion of your income that is being deducted. Then later on, when you're filing your final return, is when you declare now the rest. I hope that's clear.
Thank you, Brian. Doreen has raised her hand, so let me allow her to speak so that she can be able to ask her question. Doreen, you can unmute and ask your question.
Hi everyone, how are you?
Good, Doreen.
Okay, so I would just like maybe to give a life case scenario so that I can better understand what Brian was talking about. So maybe I will just give a life in a day of a creator and understand at what point at what point will the taxes come. So here's my scenario. I am a freelancer, so I've been approached by a brand, and this brand would like me to specifically handle a particular advertisement, let's say on Facebook. So first, let's say my consulting fee will be 5,000. They have given me an ad budget of another 5,000, and because of content creation and hyping up of the event, they're giving me maybe an allowance of 2,000. So the ad management is supposed to run for about a week. So I am having 12,000 being given to me for a week. What are the taxes? How am I going to handle this 12,000?
Thank you, Doreen. Brian?
Thank you for that question, Doreen. So maybe how I will start to respond is that first of all, you will notice that there's usually a tax exemption for any income that is less than, for the resident taxpayers, that is. Let's say you're doing the gig for a resident taxpayer. So there's usually a tax exemption for any income that is less than 24,000 shillings per month. So if that, whatever, like the example you provided, you have not reached the threshold of the 24,000 shillings for that particular gig. So I would not expect that there will be any withholding in that respect. But you'll find that maybe in a month, you've done maybe 5 or 6 gigs, or the same person has engaged you severally. So while making this payment, they are not obligated to deduct the 5% withholding, because it has not reached the threshold of 24,000 shillings. But now on your own accord, maybe within that month, you've done, or within the year. So if you calculate this 24,000 per month, in a year, it comes to 288,000. So in a year, if you've made less than 288,000, you are again not going to be charged any tax. So basically, your income is exempt. And of course, I'm not telling you this so that you go and plan your tax, your income, how your payments are coming in. But anyway, it's information that is available to you in our tax laws. So, but in the case that you've earned anything above 288,000 in a year, then at the end of the year, as a patriotic Kenyan, you are required to file a return and declare your income, and then claim any expenses thereof, and finally pay any taxes therein. So I hope that answers your question. But again, for the non-residents, if you're earning any income from YouTube, for example, through your content, then 5% will always be deducted for any payment that you have received.
Okay, I see Doreen has a follow-up question. Doreen?
Yes, I do. Thank you. So let's then increase the amount to, let's say, how much? 10, no, let's say 20,000. Because wait, when I was talking about the ad budget, you remember Facebook is still going to deduct me 16% with the invoice. So as much as you're saying I am exempted from tax, Facebook is going to still charge me 16%, despite my ad budget being, I don't know how, because I am sure Facebook is going to request the 16% when they're giving me an invoice of the 5,000 that I'm going to use for promotion. So
Okay,
how?
I understand.
Yeah.
Where you're coming from. So I'm sorry to cut you short. So there's a difference between VAT and the income tax. They are usually treated differently. So you see, for any taxes that are termed as income tax are taxes that directly affect your direct income. So the amount that you're being paid to do that gig, let's say you mentioned 5,000, so that is your income. But these others are maybe to facilitate that, the tax, to facilitate the job that you are doing.
Yes.
So now, when it comes to VAT is usually termed as, also income tax is termed as a direct tax because of the way it's taxing you directly, your income. But for VAT is an indirect tax. So what it does is that Google or Facebook will charge you 16%, but it's charging and accounting on behalf of yourself. So you are paying to Google so that Google accounts it to us. And now to you, because you're not, I might assume you might not be a B2B, or maybe you have a company that handles this content monetization. If you have a company and it has a VAT aspect, or if you yourself, your personal PIN has the VAT aspect, then you'll be able to claim back the 16% while you're invoicing, say Safaricom. Let's say you're doing a gig for Safaricom. When you're invoicing Safaricom, you invoice them with a 16% VAT. So if you do not have VAT on your PIN, if you don't have the VAT obligation, then you will have to find a way to absorb that 16%, because to us it will be seen as a business to consumer transaction. I hope it's not too deep. But I'm here to clarify, Doreen.
Okay. And what about the 2,000 that they were paying me to maybe dance for them and say that Safaricom is the best? How do I handle that?
So for that one, you'll have to probably keep a tab of how you are for the entire year, because I'm sure you are not going to survive on the 2,000 the entire year. You must be having another group. You're moving there. You're going to Equity. You're coming to KRA. If that is maybe it might be your part time, or maybe you're full time and you have other part times. So all your income that you've earned for a particular year, calendar year from January to December, is what now you're coming to declare. Now, like a period like this, now people are declaring what they earned in 2025. So if you find out that the entire income that you earned is less than 288,000 in that year, then even if you file a return, you will notice that it will not charge any tax on that figure. So you'll just declare maybe you made 270,000 and you had a few expenses here and there, but at the end of the day, the tax calculation will be zero.
Okay. So I'm really sorry to have back and forth. I hope you will still mind. Don't mind me. I just want to get this clear.
Yeah, I prefer it
Now,
that way.
okay, in a scenario whereby the consulting fee now has gone to 50,000,
Yes.
the ad budget that have been given to facilitate the advertisement on Meta has gone to another 50,000.
Yes.
And then for the mentions throughout the week, we are talking about 100,000. And then as an individual, I have the VAT obligation, so I can be able to claim the 16% from Facebook and also charge my client the 16% VAT during invoicing. So could we maybe have a calculation on how much am I supposed to remit, how much am I supposed to charge, or what is with now these new figures? We're talking about 50,000, ad budget of 50,000, and a mention of 100,000 with a consultancy fee of 50,000.
So I would assume that how would your invoice look like? What you're invoicing, say, Safaricom?
What
This
I
is the
am
total.
invoicing, yes, I am actually invoicing Safaricom 200,000.
200.
But now, yes, we are. They're supposed to pay me 200,000. But this is VAT exclusive because I've not. At what point am I supposed to add the VAT? Because you see, in the ad, with my ad budget, the 50,000 is inclusive of the 16% VAT I'm going to get from Meta.
Okay.
The mentions and the consulting is basically me. That is what I charge for my creativity. Yes.
So now let me try and break it down. Maybe how you would do it, and maybe if you use this example somewhere else, you can also pay me some royalty for my example. So so while you've invoiced them 200,000. So for you, what does it take for you to earn this 200,000? So number one, you've mentioned that you have paid some ad space, maybe. The amounts that you've paid to Meta, you said 50,000. Yes.
Yes.
And an extra 2,000 maybe to boost or something. There's some few things you mentioned there.
Yes.
So these amounts you'll be charged VAT by.
Meta.
By Meta.
Yes.
So those, let's call it another 60,000 that was charged by Meta for VAT. I mean, you've taken these services from Meta. So that's 60,000, right?
Yes.
Okay. Again, now you decided because of this, it's something that you need it to. It's an opportunity that you want others to even see and maybe take you to the next level. You decide now, I'm going to Diani in order to shoot this video. So you'll have the air ticket. You'll pay maybe an Airbnb there. You'll pay the venue. You'll probably pay some people to, maybe professional guys to shoot the videos for you. And all these people are charging you VAT. So at the end of the day, by the time you're earning this 200,000, you've been charged VAT so many other places, including your taxi ride to the airport and all that. So all this is what you're going to use. Remember the conversation we had about input tax?
Yes.
So this the bit of the expenses is what will be charged as input tax. So just for you to recover, because remember it's a business to business transaction, the way you've
Yes.
put it. For you to recover this VAT, you must charge Safaricom VAT on the entire invoice.
Mm-hmm.
So this 200,000, I will assume that it will be plus 16%. So it is like 116%, the 200,000. So all the input VAT that you've incurred you will have charged your customer in advance. So you charge them VAT, and then you recover the VAT through the input tax that you were charged earlier. So you see, this is not really your tax, because Safaricom will pay you VAT on the entire 200,000, just because you've added value to it. It was not just a kawaida video. You've added a lot of value for it so that it meets the standards of such a corporate. So you charge them VAT on the entire amount. Then you recoup some of what you've been charged by these other platforms, the Metas, the Uber, the Airbnb where you stayed, or the hotel. So that's how now any balance that is there, you either pay or you become in a credit position. So sort of you can use it in your next filing.
Okay,
Is
so
it any better?
essentially,
Mhm.
essentially, if let's say if the 200,000 was exclusive of tax, if I were to make an inclusive tax invoice, it would maybe come to 232,000, right? That is
Yes,
inclusive of
exactly.
VAT.
Exactly,
And
yes.
then once they have, so at what point are they supposed to be? They're supposed to be paying me the 232, or they're supposed to be paying me.
Yes, they should be paying you the 232.
Uh-huh.
Then
And
you
then now,
will be
because they
accounting
have
it.
my, yes, so now the 32,000, it is up to me to ensure that I remit it to KRA.
Yes, yes. Remember, for you to be paid that,
But
you have to give out an eTeams compliant receipt that indicates clearly that you have charged 16%.
which takes me back to your initial slide whereby you're saying that for the non-resident, so for us residents and content creators, we need to register on eTeams.
Yes, all of us, all the residents, if you're offering any service apart from being paid salary, the conventional salary and wages,
Yes.
then you must issue an eTeams compliant receipt. And I'm very glad that most of the businesses out here already know, and they will not allow you to like, if you're working with these big corporates, they'll not allow any just invoice. It has to be an eTeams compliant invoice. Or now for the non-residents, if you are non-resident, they'll accept your invoice as a non-resident.
Okay. Yeah, I think that clarifies. Thank you.
Thank you so
Asante
much,
sana.
Brian. We have a question from Anne. Anne, let me allow you to. You can unmute. Anne Njoroge, you're here with us? Anne, can you hear us? Anne, if you're speaking, we can't hear you. Okay. Is there anyone else who would like to ask Brian a question before we end the session?
Hello, hi.
Hi, Anne.
Sorry about that. I think my audio was a bit having some default. So
Mm,
I wanted to request, is it okay if you send the presentation slides?
The training is available on KRE TV.
Okay.
Yeah, so you can follow it from there.
Okay, thanks.
Yes, you're welcome. Any other question, Anne?
Not at all.
Okay, all right. Okay, so if there's no other question, I've seen Ivy has responded to quite a number of questions on the chat section. Please note that there is a lot of information that we have on taxation, general taxation, in the different tax heads on KRA, on our Kenya Revenue Authority website.